All right, everybody. Happy afternoon. Good afternoon. Welcome to Taproom Transaction Fees Simplified. We're really excited to be here, and thank you to Andrew and CBP and all of our sponsors are the Aseptic Fruit Purees, Craft Brewery, FinancialTraining.com, and Jason Sleeman, Brewery Lender. We'll kick it off here shortly. All right, everybody, good afternoon again. My name is Rachel Kesley. I'm with Arryved Inc. I'm a solutions engineer over there. Have a long history in food and beverage, from being a chef to running a tap room or a director of sales for a brewery here in Denver. And excited to chat with all of you all today.
And I am Mel Smith. I'm a CPA and I specialize in craft beverage accounting. I work for a public accounting firm. It's called Perkins & Co. It's based out of Portland, Oregon, but I actually work remotely from Wyoming, so our clients are kind of scattered about. I have been doing manufacturing accounting for the last 15 years, and in 2013 started working at my first brewery. So I've been in the brewing game for 10 years now, and I worked at Odell Brewing Company. I was the controller of Blacktooth Brewing Company, which is like a regional brewery, and then also was the controller for Melvin Brewing Company. So I've been in more or less the consulting game. We kind of do everything in client accounting services, from like monthly work, review, financial work. And then Perkins also, obviously has like tax and audit as your typical accounting firm. But Rachel and I are super excited to speak with you on this topic today. It's something that we think is really important, especially to increasing your bottom line. So let's go ahead and hop into it. The first thing we're going to talk about is total cost of ownership. So when you think about your POS system, there are so many different things that are included in that. And the first thing is really having the right tech stack. So that can really help you save money on so many different things. And again, thinking of these things as direct impacts to your bottom line. So the little things you save are directly increasing your bottom line. So you can save on labor. When you have the right POS system that drives the right data, you can also help solve some production decisions and also make it just super easy for your customers to purchase more, and also drive up those tab sizes. So this is really the hub too for your main revenue center in your tap room. So you want to make sure that you have all the data you need to really analyze and help your tap room perform more efficiently, and obviously increasing your income. And then choosing the right partners, especially early on in the process, is one of the most important decisions that you can make. So whether you might be reevaluating your POS system right now, or whether you're just getting into the game and there are so many different options, and all of them seem to have slightly different contracts with slightly different ways that they're charging you for their product. So it's really important to fully understand that. So POS pricing isn't just, your monthly fee or maybe if it's a flat rate. That isn't it. It's also the value that you're getting out of this system to really help you grow your business. So thinking about all of the features and all of the products and all of the data that is most important to you. So coming up with a budget is really important. Also, you'll hear me talk through this about financials and budgeting. I can preach to that, until I'm blue in the face. But coming up with a budget is super important to what you want to spend, but also being flexible within that budget, because some of your costs might not hit all at once. And then also listing out your non-negotiables. Data is something that is so incredibly valuable if you use it. So understanding what data your POS system can deliver to you, and how that would impact some of your decision making. So the other things we're going to cover today in our discussion are going to be demystifying those POS keywords. There's a lot to cover in this, and there's a lot of probably first-time terms for many of you, especially if you're getting into looking and evaluating POS systems. We'll also talk a lot about accounting. That's why I'm here, in terms of how you're going to account for the expenses that you're incurring through your POS system. And then we'll take a couple of practical examples to show you really how to apply all of the information you're going to learn today.
So let's jump into demystifying those POS keywords. So there's a ton of verbiage out there, a lot of buzzwords, a lot of things that roll into that total cost of ownership that Mel was just talking about. Kind of on that high level, what is a point of sale, right? So that point of sale is really going to be your hub, your financial hub for your tasting room, tap room, brew pub. It's where you're going to have that full suite of features and products that your guests can order your goods, you can get them into your hands, and you take that payment, be it credit card, cash, gift card. That's going to also have a lot of those analytics in there that are going to help drive those data-driven decisions from what's selling, what's not selling, when should we staff, payroll, timekeeping, loyalty programs. All of that is rolled up into what we call POS, your point of sale. Now, with that as the umbrella, there are some three major factors kind of within what that point of sale is. One being software. So that's going to be proprietary software for your point of sale company. So that's the buttons you're pushing, how you create your menus, your online store, QR code ordering, things like that. That's all going to be in that software piece of it. Now, hardware is going to be the tangibles, right? What are you ringing in on? Those card readers, printers, cash drawers, KDS systems, all of that's going to be the hardware associated to what we're talking about as that system of the point of sale. And then network. Network can also be one of the more complicated bits of it, right? We've got to talk to the bank. You want your hardware to talk to each other, to talk to the printers, so those receipts print out from what you're ringing in. Now, some systems out there are going to want you to have a proprietary network hardware, maybe a router. But depending on how big your space is, you might need to look into wireless access points so that your Wi-Fi network really reaches to all corners of your property, so that, dependent on your service models, which we'll hop into next, you can really take, your point of sale anywhere. Those devices can talk to each other, and you're, connected to the internet there. So that gives us into service model. Now, service model, when you're thinking point of sale, you might think, Rach, why are you talking about service model? Well, that can really drive a decision on what that point of sale and that technology system looks like for your tap room, right? Are you doing counter service, which is kind of that traditional tap room model? I'm going up, starting a tab with the bartender. I'm going to go sit outside. If I want another beer, I'm coming back inside. So the main hub of that ordering experience is behind that counter. We can also have table service, right? So maybe that puts in a lot of handhelds into your servers with sections, doing that traditional table side service model. And that can also drive up some costs on your hardware side. We'll get into that a little bit deeper later on, but it all rolls back into this service model conversation. Now, contactless, right? That's become wildly popular and necessary in the last few years. So that QR code ordering, online ordering, contactless payments, ways of starting tabs, that can also factor into your processing rates, your total cost of ownership, hardware, et cetera. Or are you going to be flexible, right? Depending on the space, the clientele, your employees, can you utilize a little bit of all of these depending on the day, the service, and the type of business or busyness that you have in your space.
So as far as financial statement keywords, I'm going to hit these pretty high level. We're not going into any details. You most likely heard of all of these terms before, but these are going to be the things we chat about today. So profit and loss, or your P&L statement. There's a very high level screenshot on the slide as well. So this is a financial statement that summarizes your revenue, your cost of goods sold to get your margin, and then also all of your operating expenses and your other income and other expenses over a period of time. So typically you're evaluating this on a monthly, quarterly, or annual basis. Well, you should be evaluating them on all of those. And then EBITDA is a word thrown around quite a bit. So that's earnings before taxes, interest, depreciation, and amortization. So this is going to be before any of those other kinds of items. So typically you see this also referred to as income from operations. Sometimes there are some other things that are included in EBITDA before or after that income from operations line. And then also your balance sheet. So I didn't put a screenshot on this, but all that is summarizing your assets, liabilities, and then your equity and your capital.
Okay, so we've gone through some definitions. We've talked about your total cost of ownership. Now let's break that TCO down. When we talk about, your processing rates as well as your total, your point of sale costs, we generally want to break that down into three buckets. One being credit card processing, which is likely the most complicated portion of this particular talk and of what goes into your POS. Then we've got those upfront costs and any recurring costs based off of your hardware and software needs, but we'll kind of dive into that. So here we're going to really go into credit card processing. So credit card processing is, how you take payments with a card, credit or debit. There's a lot of different fees that are rolled up into what we call credit card processing. There are also different ways of how that processing rate is presented to you all, the merchant. So we'll dive into interchange. We'll dive into flat rate. There is a percentage plus model out there as well. We're going to chat about per auth fees. So anytime a network is hit, there is a cost associated to it, and you want to know what that is going into the conversation. And then we also are going to chat about how you're receiving all of those payments, right? There's the full suite of features and products. Are you doing majority in person, QR code ordering, online, things like that, all have a different associated credit card processing cost potential for your bottom line. So interchange, what is it? Interchange is one of the more complicated parts to kind of wrap your head around when it comes to credit card processing. It is, however, the static part of credit card processing. It's dictated by the card companies. It's charged to you all, the merchant, based off the card that your customer uses. So, debit versus credit, high points cards versus business cards, travel cards. There are hundreds and hundreds of different interchange rates out there. And they're all charged to you all based off of what card your customer uses to pay for that interaction and that transaction. Now, the payment processor piece, that's going to be your variable piece, right? So the portion on top of interchange is going to change dependent on who your processor is and how it's presented to you. Now, the couple ways that we're going to really dive into today are the interchange plus model as well as the flat rate model. So and why choose one over the other? What are we looking at here, right? So the interchange plus model is where, maybe you're in an area where we're seeing over 40% debit cards. Debit cards generally are going to have a lower interchange rate. You want to take advantage of that, right? Take advantage of those low interchange costs. So that interchange plus model is going to have a transparent pass through to you all based off of the card used for those transactions. And then the portion on top of that is going to be your processor. So there's usually a percentage or basis points associated to that, plus a per authorization fee on that as well. Now, a flat rate is going to be just a flat percentage charged to you all monthly based off of your revenue of what you're taking in based off of those credit cards. Now, why would this be beneficial, right? Maybe you're in an office park. Maybe you're seeing a lot of Amex. You're seeing a lot of those rewards or bonus point cards. And those generally have a quite high interchange rate, right? So by choosing a flat rate, you're really able to create more predictability and stability on what you're paying, and it's taking out the variable piece of those high interchange rates and hopefully bringing them down a little bit. So also where and how you're taking payments can really dictate what those percentages are. QR code ordering, online ordering can have some card not present charges associated to them. Those have different interchange rates as well. If you're pre-authing versus deferred authing, there's anytime you're hitting a bank, there's a charge associated to it. So those auth fees can, dependent on how many times you're pinging the bank during one transaction, kind of go up. So you really want to make sure, hey, are we going all QR code ordering? Is that going to help us drive those average tab sizes up so that extra, interchange rate may come out in the wash? It's really up to you to know your model, your neighborhood, the spending patterns of your guests, and what kind of cards they're using. So now we've kind of gotten that interchange bit associated to the transactions here. Now, who has a hand in that transaction? Well, there's quite a few people from one transaction where that lump sum is getting parsed out to. So one is issuing banks. So those are going to be the banks that issue the cards, the debit cards and the credit cards to your customers. There's also the card networks. Again, those are Visa, MasterCard, Amex, Discovery. Those are all dictating interchange. They do that about twice a year. They dictate interchange based off the card your customer uses, and it gets directly passed through to you all. Again, in either scenario that you pick, interchange plus versus flat rate. They're also acquiring banks. That's your bank, right? So that's going to be your merchant bank, your financial institution that processes those payments for merchants and settles those funds to your accounts. There are also network fees, right? So, and again, anytime a network is pinged, there is a cost associated to that. Interchange, we did a deep dive in, but really those can, range anywhere from 2.1% plus 10 cents per authorization on the high end to where, if you're seeing a lot of debit cards, you might be able to get to take advantage of that, maybe a 0.5% and 22 cents per transaction. So they can really range. And if you've ever seen a credit card processing statement, you can see all of those listed out based off of those transactions. Now, we did want to point out debit cards here. We're seeing, especially with Arryved customers, that about 43 to 45% of Arryved customers are using debit cards. So that means it's a low interchange rate. So if that's what you're seeing generally within your neighborhood or your customer base, then that can also help drive, a decision on which processing rate to go with. If you're a new business and you don't have historical data to go off of from your current customers, maybe ask your neighbors. They probably won't share their financials, but they might say, hey, we're really seeing an uptick in Amex cards these days. Or we're really seeing, a go back to cash or, debit cards. And that's kind of bringing our processing rates down. So make friends with those neighbors. What they're seeing is likely what you could see in your space as well. So we've thrown a lot of glossary terms at you. We've got some visuals here. So, when we're talking about a transaction and an average tab size of sorts, we like to see kind of average tab sizes in the $25 to $30 range. We're showing a $33 average tab size here. And that's really important because, with transaction fees, the higher the average tab size, that per transaction fee is actually the same if it's $33 or if it's $7. So your all-in percentage rate can go down based off of how large your average tab sizes are. So upselling comes into play. Are you adding food? Are you not adding food? What's going on into the life of that tab so that we can drive up some business? Now, once you have that transaction, I pay, I leave. Now let's break it down. So this is based off of a debit card transaction on Interchange Plus, as well as that flat rate. So from an Interchange Plus transaction here on that $33 tab size for a debit card, you all would take home $32.44. So where did that other dollar amount go, right? So 24 cents is actually going to the issuing bank in this particular example, 10 cents to the network, 6 cents to the gateway acquirer, and 16 cents to your processing provider, right? So there's portions of that transaction that get dispersed to all of those main parties. Now, in a flat rate, again, this is based off of a debit card, but if it was a high points card, this might be more beneficial for you and your business. In this particular case, for a $33 transaction, you're taking home $32.03. Now, again, 24 cents to the issuing bank, 10 cents to the network, and depending on your percentage, in this case, it would be 63 cents to the processor. Now, where that becomes beneficial, though, is if you're not seeing a lot of those low interchange rate cards, this can create some stability and predictability on, hey, we know we're paying X percentage amount for our cards. We can account for that and go forward. So some of that might be, may not be as much as if you're just paying interchange on all of those high interchange cards, but you're actually being able to predict a little bit more.
Okay, so now you know how your credit card processing fees are being calculated. So where do those show up on your financials? They really should show up under COGS. I've seen them, I've actually seen them decreasing revenue, and I've seen them also in operating expenses. but you should be generally considering these as part of your business expenses. Like, this is a cost of doing business, which means it should be recorded under COGS. Generally, as far as a benchmark, I see typically anywhere from like 3.5% to 5% of your revenue is pretty standard for credit card processing fees. I've seen it go slightly under 3.5% for some people, and I've also seen it go over 5%. But generally, that is like a good benchmarking range where you should be keeping your credit card fees in line with. So as far as buckets of upfront costs, so these are going to be things that you need to pay out right away for your POS system. So this is going to be implementation and any training of your staff. So that will require some upfront fees, including additional labor. And then also hardware. Hardware is a big one. You can have a piece of this be recurring if you're leasing equipment, for example. But if you're buying it outright, just know to budget that you have this upfront cost right away. And then be clear on what those policies are if you are leasing equipment. Rachel's going to go into this a little bit more detail.
Yeah, that's great advice, Mel, because there is always some fine print within any kind of contract out there. You really want to know what that is, right? And then your decisions on what your upfront hardware costs are going to be can really relate back to that service model we talked about a few slides ago, right? So if we're in that counter service and maybe it's a small space and you just need one terminal back there with a cash drawer, a printer, and maybe a card reader or two, then that's going to have a much different associated cost to, hey, we're going full table service. I want everybody to have a handheld with a card reader. We need, XYZ amount of printers behind the bar. We're going to throw in some kitchen food and have a kitchen, and maybe we need a KDS, right? So I've really seen in hardware quotes go from $600 to $10,000 pretty fast, depending on what your service model is, what your needs are. Now, the benefit of some of that technology bits, though, is that the ROI is, the more technology you have in your server's hands or at the fingertips of your guest, if it's a QR code, the easier you make driving up that average tab size, and the easier you make the easier you make it for folks to order goods and build those average tab sizes, really helps pad your bottom line. So the investment up front can really pay off fairly quickly in the back end, but can have some sticker shock up front too. But that all is to say is that really lean into what your service model is, using that technology piece and that hardware piece to add to that guest experience is key. And there is a cost associated to that, but it pays back in spades in the back end.
And so where those hardware fees are going to show up on your financials is also important for budgeting. So really you're looking at two different ways here. If you're purchasing your hardware up front and it is a significant amount of cost, you're going to be recording that on your balance sheet included in your fixed assets. Now you're not going to have $750,000 hopefully of POS costs, but it is going to be included in that line item on your financials. If you're going to be purchasing it and it's a bunch of little tiny things that don't trip your fixed asset capitalization policy, hopefully you have one, then you're going to be recording that right on your financials, right on your profit and loss statement. So that's going to be in an operating expenses bucket. So it'll be a below the line, below your margin, but you're still going to want to make sure you're budgeting for it because it'll probably stick out when you're purchasing that item.
Okay, so we're coming up on our third bucket of costs, which is recurring costs. Probably the least fun. Well, maybe credit card processing is the most complicated, but the ones that you see coming up, month over month, year after year, they can really, take a shape in a few different ways. So mainly that one would be software, right? So your feature sets. Again, we talked about that full suite of features rolled up into, your one point of sale system. Do each of those features have a cost associated to it? Do you have to pick and choose? That's something that you should really know up front as you're making these types of decisions. Again, back to service model and how you want your guests to order. What do you want to provide for them as tools to be able to make those orders? And then there's always, kind of SaaS fees or platform fees associated with that software management and upkeep. know what those are. Do they change over time? Really know what that cost is so that you can factor that into your total cost of ownership. And again, as we just talked about hardware, I'll hit on it briefly, but those could have, if you're leasing, that could have a monthly cost. Are you renting to buy? Monthly cost? Is there a per terminal or per device fee for upkeep and management? Those are things you should all factor into, what that bottom line looks like for you all. Are you allowed to have a certain number of employees using a clock in or log in? Are you getting, once you hit a threshold, does the cost go up? And integrations and things like that. Do you need to integrate with other systems in order to create that dining or that drinking experience essentially at your tap room in order to make that guest experience the best that it can be? Now, support and miscellaneous. Never, ever, ever underestimate the value of good support. They are going to be the lifeline on the other end of a busy Friday night when inevitably something goes wrong. You want to be able to have reliable support that knows what you're going through at any given moment. They have the ability to make those changes and help you get back up online. Is that an extra cost, right? Is there a threshold of how many calls that you can make? Do you have termination and penalty fees? And then again, those integrations, those true cost integrations on, delivery systems, anything outside of your plan for your point of sale that you're implementing. What else do you need to input into that kind of ecosphere for technology for the guests and ordering experience?
And I love what you said about support, because that, I think we've all worked for breweries where it's a Friday or a Saturday night and something happens and your network goes down. We've all been there. And I don't know about any of our viewers' experiences, but I know I've had a bad experience when you're just like, oh my goodness, okay, so we can't take payments. Cool. What are we going to do? So
Right.
yeah, the support is key. So as far as where these recurring costs should show up on your financials, we're not going to get into lease accounting today. That'll be for a different webinar. But anyway, all of these monthly recurring costs are going to fall into your operating expenses. So you'll have a software, maybe a monthly software platform fee or something like that. You're going to have that in your software bucket. Depending on your lease accounting, if you have like small payments, or if you're adding new equipment that is minimal, then you're going to want to include that in your P&L too. Obviously, everything to say that you should consider this in your annual budgeting process. And then we are also now going to get into some practical examples.
Yes. So, we've done a lot of keywords and definitions. We're not going to have, a test at the end, but there's a lot of information here. So we wanted to give you all some tangibles to kind of take away. Again, I'll harp on it again and again. I'm a broken record about average tab sizes, making sure that you can get as much on one tab as possible from a credit card processing standpoint is really going to help drive those costs down. So, in this particular example, we're leaning into the Interchange Plus model here. So on the example on the left, we've got 5 items for a total of $68.81. Where on the right, we've got 2 items for a total of $33.28. Both solid average tab sizes. But if you think about, your per transaction fee or your per auth fee, maybe it's 15 cents, maybe it's 10 cents. Those cents are going to be the same, whether it's one beverage or $68.81 worth of goods, right? So the percentage of that, just from your bottom line perspective, are greatly different. So making sure, that's why we saw, kind of back in the day, a minimum credit card spend is because there is cost associated to it. So the more you can build those tab sizes for a lot of variety of different reasons, the better it is for you and your business, and for the tips of your employees as well. So everybody's happy.
Okay, so we're going to look at monthly P&L. This is a snippet of June 2022, and just realize that this can also be flipped depending on, everything that Rachel's really called out. So in example 1, you purchased your hardware, you're using that Interchange Plus processing. most of your cards that are used are debit cards, and that's bringing you in about an average 3.5% for your credit card fees. You have e-commerce with no additional fees, and then you also have your software fees at $100 a month. And then example 2, we have your purchase hardware, but this time you have a flat rate processing fee of 4.5%. You have e-commerce, but with additional fees when people pay online, but there's no monthly SaaS fees. So if you're looking at example number 1, your credit card fees are going to be 3.5% at $3,500 for that month. Your software is going to be $100. Now, your flip example on example number 2, your credit card fees are going to be $4,500, but you're not going to have any software expense. So if you look down at the very bottom, the annualized total cost of your POS, and this obviously is excluding your purchased hardware, is $43,200 compared to $54,000. So that's an annual savings of $10,800. So this isn't to say one is better than the other. It's to say this makes a huge impact to your bottom line. So understanding how these fees could affect that is really important, and utilizing your software partners to help you analyze what this could be. So this isn't all on you. You should be very open when you're evaluating POS systems, and put some ownership on them too, to say, like, they should be providing you with information as well, partnering with you to see what the true cost, the total cost of ownership is going to be for you. So it can make a significant difference in your business.
Yeah, that's a great point, Mel. I wanted to add another point in there too, based off of, some data and tracking. Really lean into your tech partners on, hey, are you able to make those staffing decisions that help, bring down your staff costs, but drive up revenue? Are you able to see what's selling and what's not selling to make menu decisions, so that, you're not having a line hang on with a beer that may be slowing down, or maybe didn't hit the market as with the splash that you thought it was going to be. So, there is a cost associated, but there are also some data-driven decisions that you can make when you choose the right partners, both on the financial side as well as the technology side, and making sure that those all can kind of work in unison, and make everything, all those decisions that you have to make, as educated and as proactive as you possibly can, because that's the name of the game in the food and beverage world.
We're all looking for ways to increase that bottom line.
Yep. True. We got here fast, Mel. Any questions?
I know.
Any questions from you all out there? Subtle Sunday also agreed that support is everything. Can't stress that support enough.
And if you're like me, hearing Rachel talk about all of these intricacies and interchange and everything, you need some time to let it sink in. So feel free to reach back out to either of us if you have any questions, post this webinar and need more clarification on anything.
Absolutely. And for that outreach, you can reach both of us. I'm Rachel at Arryved, and Mel.
I'm Mel, Perkins & Co. And both of our email addresses are on your screen.
Thank you all so much.
Thanks, everyone. And thanks, Rachel.